Assalamu alaikum everybody, welcome back to the channel. In today's video I'm going to share with you my growth portfolio. I've already shared my dividend paying portfolio, so if you like that, please go, and if you want to see it, please go and have a look at some of my old videos. Now the growth portfolio is something that I started about a year ago. I've got 4 companies so far. I'm doing a lot of research. There's a lot of overvalued companies out there at the moment, so I'm trying not to buy too many. So if I see a dip, I like to buy these companies because I believe these are companies that are going to be around for a long time. They might not be making profit at the moment, because when you are buying growth companies, that's what tends to happen normally, because what they do is they take their money and the revenue or whatever the profit they've made and use that to put it back into the company to grow the company further. So it takes a while for these companies to actually see a huge profit. So at the moment, I'm just dollar averaging as much as I can, and I'm going to continue doing that in the next few years. So the first company we're going to look at today is this company. And by the way, what I'm going to do is at the end of the video, I'm going to share with you the whole portfolio, and then I'm going to show you, basically give you a quick update of my trading 212 account to see how things. We've just had a crazy week, so I just want to show you very quickly basically where I am at the moment and where I was maybe about 2 weeks ago. So the first company, like I said, is Tattoo Chef. Tattoo Chef basically is a plant-based food company. They produce and sell portfolio of frozen foods. Now, if you go to certain company, basically retails in the US, for example, Target, you should be able to find their products. Let's have a look at the investor presentation. These are the types of products they have. They've got single serve, they've got smoothies, vegetable blends, meat alternatives, plant-powered pizza. When I saw this, I was like, well, what does that even mean? Anyway, so plant-powered pizza basically apparently exists, and that's one of the things they've actually do. 2017, they only had 2 SKUs or 2 products. 2018, they had about 19. Then as you can see, over the last basically 2019 and 2020 and 2021, they've actually grown so much. This is really nice to see for me, and as an investor, I like this because the company are actually taking the profit and coming up with more products and more ideas and more options for their customers. The more they do this, obviously the more customers they will have, and I hope, at the moment they're only in the US, so hopefully they will come to the UK so we can try some of their products in the maybe next couple of years. And like I was saying earlier, if you go to Target, for example, or Food Lion, or some of these companies that I've never heard of, okay, which are actually based in the US, you can buy their products. And again, it's really good to see that their products is actually available in a lot of the retailers out there, and you can buy their products at any time you want. So great to see that. One of the things that I love about this company is their product cycle. They call it circle of advantage. So they innovate, they design it, they plant, they grow it, and they manufacture it. So they are involved in every single step, okay, of this product cycle. So again, it's really lovely to see that they're doing this, and that shows basically they want to innovate, they want to design their own product, they want to create, they want to plant it, they want to design it, and they want to manufacture it by themselves. So that's excellent to see. All right, so the final thing is just the financials. So if you look at it, 2019 and 2020, they've grown basically 87% revenue. The gross margin grew about 70%, and the adjusted EBITDA grew 126%. And you can see 2019 and 2020, the revenue is growing, and that's basically what it looks like. Going to 2021, it will be about growth about 36%, which is really nice. Valuations is undervalued at the moment, so my plan is I own about 13 shares. I'm planning to get to about 100 shares before it becomes overvalued. At the moment, it's trading about $19, and soon it might go up to $27 per share. All right, so the next company is Crowdstrike. I own, I think, about 2 shares. The funny thing is, one of these, I bought this company when it was very cheap. I think it was around May, June time, and then it shoot up to almost 200 something. So I sold basically the entire shares. I think I had about 7 shares or 6 shares at the time, so I've sold them all to take a profit off, and then when it went down again, I bought a bit more, and I've been buying them since. But I'm only, when I say I'm buying, I'm not spending hundreds of pounds each week. I'm only buying a couple of pounds, 20 pounds, 30 pounds, whatever is left off when I finish a trade and so on. So again, have a look at this company if you're interested. Crowdstrike, they are basically cybersecurity company. So they provide cloud delivery solutions for next generation endpoint protection for companies in the US and so on. If you look at their investor presentations, what you will notice is 49 of the Fortune 100 companies use this company to protect themselves, okay, and one of those companies that actually use is some of these companies are Formula One companies, because data is becoming the new commodity and companies need to protect their data. And as you can see, their subscription customers, what that means is every single month, basically these companies pay Crowdstrike to support them. Okay, and it's not only the security side of things, they also analyze their data. There's a couple of videos on their presentation, so if you watch the Mercedes AMG presentation, is really fascinating, the things they do for Mercedes. Okay, so not only do they actually protect the data, they analyze their data. Data is the new commodity. Everybody needs protection these days, and this is one of the best companies out there at the moment that is doing this. So it has a great future ahead of it, but the only problem is this company is slightly overpriced. For me anyway, it's slightly overpriced. If according to the analyst is actually a buy, okay, and the analysts are saying basically the average should be about 235, 180 for up and coming company. I think it's got great future ahead of it, but at the moment I feel like that's slightly overpriced. But I don't mind, because all I'm doing is dollar averaging every single month, and before it goes back to that, that hits that average, I'm gonna try to get at least the 5 to 10 shares. And if you look at Simply Wall Street, you can see it's undervalued by 25.4% at the moment. So again, the analysts are basically agreeing on that. So I'm going to try to get as much shares as I possibly can in the next few weeks. Once I get my ISA account back, I'm thinking on the 6th of April, I'm definitely buying a bit more of this company. Again, I'm using Freetrade at the moment for basically to buy the shares. So I will be adding to as much as I can. And the future growth, I think on the company, just if I quickly, and if you go to Yahoo Finance, what you will notice is the next year, basically the analysts are saying this company is going to grow about 27%. And then next 5 years per annum, it will be about 25%. So really good company. They're going to be around for a long time. Data is becoming the new commodity where basically we need to protect our data. So is a lot of companies, because they use our data to do all sorts of things. So they need that protection. So Crowdstrike is my second. All right, the third company in my portfolio is Salesforce. This is one of the biggest companies in the Dow Jones. Is actually joined the Dow Jones very recently. I think it was September 2020. It develops enterprise cloud computing solutions with a focus on customer relationship management worldwide. And this is really important, because what they do is they help a lot of companies collect data and basically help a lot to maintain the information they've got from these customers, and obviously help them how the companies can provide basically a quality service for their customers. So they analyze the data, they look at trends, what the customers want, and so on. Okay, so they've got some of their clients are some of the biggest companies around the world. So it's really lovely to see that. And as you can see, there's already the last two companies, they have a lot of similarities. Their customer base is not just like a normal average people. There's actually huge companies that are dealing with so much data. Let me just show you. Currently, this company is undervalued by 19%, which I was actually really surprised, because I've been buying shares in this company. I think I own about 2 something shares, and I've been buying it just a bit by bit here and there. But then I saw the other day the fact that it was actually way undervalued. Then I thought it was overvalued, but it's actually undervalued. So I'm going to try to also, once I get my ISA, definitely start buying a bit more shares in this company. So at the moment is a buy. The average will be about $276 per share. It's currently trading about $210. It was way down this week, and I bought I think one more share just this week because it was down a lot. And if you look at the next 5 years, okay, there's about 12 point, almost a 13% growth. And this is not some sort of like a high speculative kind of company. They've been around for a long time. They're very stable. They actually have a solid, customer base, and they will be around for a long time. I was very surprised, very honestly surprised that they don't pay dividend, because they've been around for a long time. But I like the fact that they're using their money to reinvest in the company. So that was really good. So Salesforce is my third and the final company that I want to share with you. I think you know this one already. Is Tesla. Okay, I'm not gonna basically give you what Tesla is. I'm sure you all know what Tesla is. I own currently 8 shares of Tesla. At one point I had 10, then I start selling slowly, still up by 62%. Okay, I've been taking profit. I absolutely love this company. Okay, but the issue is very much overpriced. People are paying premium for this company, and that worries me a little bit. So what I've been doing is just dollar averaging obviously into the company for a long time. I've been buying shares since basically May of last year. I think April or May last year was the first time I bought my shares. There you go, 21st of April I bought my first share up, and I paid £575, and currently it's trading basically less than, so if I was to, so in pounds I want to see how much that is, 400. So it was cheaper than what it was last year, obviously because of the split and all that stuff. But yeah, I really like the company. I think I'm going to hold on to it for a long time. But obviously at the same time, the thing about these companies, right? They're not going to pay you a dividend. So when they go up, and they go up so much, you definitely have to take some profit off the table, because otherwise what's the point? Because what you're doing is you're buying growth companies to basically make profit and obviously take out your profit. So my plan is in the long run is to maybe keep about 5 shares. So I think I might sell about 3 more shares, keep 5, and that will mean that 5 shares will be absolutely free, because I've been taking out a lot of my, the initial investment. I've taken majority of it already. So if I sell 3 more shares, probably when it goes back to wherever it needs to go back to, okay, maybe I'm sure it will go back up again at some point in April. I might sell it when it hits maybe about 800 or so, and then that will mean the 5 shares will be free, and just keep it and then dollar average it again after that. So Tesla is a great company. I've had them for a while. Let me show you the entire thing now. So if we go to the growth portfolio, you will see Crowdstrike. I own 1.3 shares, 13.5 of Tattoo Chef. Tesla 8 shares, Crowdstrike 2.2 shares, and at the moment the whole portfolio, because thanks to Tesla, is actually up about 30% in comparison to my to dividend growth as portfolio. You can see it's down about 2%. Okay, again, am I worried about that? Absolutely not. Like I've always said, I'm a long-term investor. All of these companies will go up, will go down. Even just yesterday morning, everything was red. Apple was down 3%, then it was up, and then it was down, and then it was up at the end. So these things happen. Am I worried? No. I checked once or twice during the day just to see what's happening. Yesterday, I was basically looking forward to buying a couple of more shares, so I kept an eye on it. But normally, I just go to work, enjoy my life, and don't worry too much about it, because I've done enough research to know exactly the companies that I own, why I own them, and the fact that I want to keep. For example, this waste management company, which I think I'm doing a video, is in next week, a week after, just to kind of give you an overview, was down about £20 a couple of days ago, and now it's up by £17, almost £18. So these things happen, and there will be, opportunities for you to dollar average and buy a little bit more of these companies. So at the moment, as you can see, I've got about £22,000 in there. At one point it was 24, so as you can see is down quite a bit in the last couple of days. again, it doesn't really bother me because I'm planning to keep it. In fact, I can literally stop buying and just leave it there for a long time. So inshallah, we'll see how it goes. But one of the things I'm definitely planning to do, and I might show, I will let you know when I do that, is to sell a couple of more Apple shares. The reason is this: if you look at Tesla, Apple, and Microsoft, this is about 16% of Tesla off my portfolio, 13%, okay, almost 9%. That's not really good, because when the stock market goes down and the tech are on sale, then that means my portfolio will actually lose a lot of this value. So I want to balance things. So I'm doing a rebalancing. So I'm gonna sell some Tesla and Apple and buy some in some of the companies that are still like 4%, 5%, 3%, and so on. So that's something that I'm definitely going to do it. Initially, I bought these two companies heavy around the time just before they split, and I really like both companies, so I'm definitely holding on to it. But I've got 33 shares of Apple, so I think that's too much. I think I might keep it maybe 25 or something like that. We'll see how it goes, inshallah. Yeah, but so that's my portfolio. This is what I've been doing. This is my growth portfolio that I shared with you today. And again, I also have, by the way, a short list. Okay, so every single week I basically add one or two companies that are either undervalued or overvalued. As you can see, Crowdstrike and as well as the Salesforce, all three of them basically that I own currently are undervalued. Okay, and that's basically the trend. So as soon as I find out a company that I like is undervalued, I just buy a little bit here and there. So these are the research that I normally do before I invest in this. Anyway, I hope you enjoyed. I hope you enjoyed the fact that I'm being transparent. Please share, like, tell your friends and so on. Let me know if you have any questions, inshallah. Have a great weekend. Thank you very much. Assalamu alaikum.